I didn't make video for a little bit. I had some issues, but I guess my fame is catching up with me, and I'm not used to all this stuff going on around me. And I don't know. I went to my doctor. I asked her, "Hey, give me some low dosage of Valium," but she said, "No, you cannot take that. It's very addictive." So I'm resorting to these herbal medications. Well, I bought Kava Kava. This is like a liquid form, a concentrate. And then there is another one. I have two, three herbs like that in concentrate forms. And then I drop a few of them in my tea or coffee, and kind of calms me down. But I'm not used to having unreal relationships like or friendships. Like someone is being chummy with me because they just want to see some of that fame or some of that money would rub off, or well, it doesn't, but people they don't stop, and it gets irritating. I don't know. I find myself running away into a little corner and hiding there. Well, I'm trying not to shut the door to women. So the door, well, that's kind of hard. Like, you're discriminating against a segment of population, and I don't know. I think I'm screwed up. Anyhow, talking about unreal things, I want to talk about the stuff that's going on in the stock market, and the dynamics is that a lot of central banks are printing or have printed a tremendous amount of money or fiat currency, and they have taken their checkbook and they gone into the to the stock market and bond market and buying all these different securities, and so our stock market has valuations that are of the stratosphere, and P ratio that's unheard of. Then also most of the valuation in the U.S. stock market, it comes from like 5 different companies, and they call these 5 the FANG, like Facebook and Apple and Google, and what else was it's like 4 or 5, and it's very dangerous because if something happens to these 5 corporations, or people discover, hey, I can get this stuff elsewhere, we don't need them, then the whole stock market could take a huge drop. But well, a lot of people they know that this is gonna happen. It has more to do with the human nature than even the stupid things the central banks do, because humans they don't really like reality very much. Well, in reality, I had companies that I was running. Things are not, they don't progress or they don't grow so rapidly, and there isn't this tremendous profit margin that show up, or earnings, because if you are in the real world and the real economy, you have to the minimum is that you have to pay rent or have office spaces. Then you have to hire employees and train them. If you are making a widget or a commodity, there is a process, and you have to buy like raw material and process it, and then make it into. Say I'm making silver bars. I have to buy silver ore and have to process that and then make it into bars or coins, and then I have to also go out and either put these on eBay, pay a commission to eBay, or get an 800 number, get salespeople. It's all like each step of the way it costs money and it takes time. And at the end of the week, I'll have so many of these widgets and these products, and then I'll have a profit margin. So let's take silver smelting or silver ore purification, which has become not a very profitable business. Because silver itself, a company is in the mining and purification of silver. Silver itself is basically money. It has been money since ancient times. But then the central banks, they don't like precious metals, and they've been beating on the price of silver. So it doesn't have a very good price, 16, 17 bucks. It's the cost of doing all this stuff to get the silver in the form that's saleable back into the fiat currency is not very much. It's not really compares in profits to like if I went into a casino and I put $100 in the dollar slot machine. Hey, I might hit it big. I might get like 1,000, and then that's a huge profit margin. Like basically it get 10 times the money that I put in. So people they don't really like having to go into the office and working all day and do that and making the $100. They would rather have the $100, which is exactly what's happening. The banks are printing them and giving them to certain investors to go into a casino that we just call it the U.S. stock market or bonds market or derivative market, and gamble with it, or they have a better name for it. They call it speculation, and suddenly something. The Persians have really funny expressions. It shows like a slanted way of thinking. It says "Dari be takhte khord," as if there was a little commotion and somebody left an office and they hit the door very hard. Dar means door. Hit the door. Suddenly the bosses they were fighting, and one of the bosses shot the other one, and when the other one was falling down, all these gold coins spilled out of his pocket, and then the employees they had a time because the other boss was trying to get away. Anyhow, this is really funny. funny the way people think about investments and commodities because it has nothing to do with reality. I just told you about silver. And silver is supposed to be in many older civilizations or many economies. Silver was basically money itself. And so if this has happened to silver, it has been going on for a long time. This has also happened to many commodities. Okay, so like about 10, 15 years ago, I was reading that there were these two economists and they were making a bet with each other. And one of them was saying that the commodities, the price of commodities in the stock market or in the world will simply gradually increase according to as the demand goes up. There's so much silver or there's so much copper, there's so much oil, and then it's supposed to be going higher and higher. So commodities would be a good investment. But then there was another economist, and he was betting against him. They had like a side bet, and he said that no, the price of commodities is going to go down, and this is exactly what has happened, because he said as the technology becomes more advanced or better, it would become easier to dig up silver or copper or oil or other commodities, and also it will become much easier because there's all these technological advancements. We haven't even had most of these advancements. Say, for example, robotics hasn't really kicked in widespread in everywhere. You don't see robots working like humans, working punching time clocks. But that's coming. Well, there is robots that they're like machines. You wouldn't necessarily see them as just like humans, but for all practical purposes, that's a very sophisticated robot, and we have been employing more and more robots. But just thinking sci-fi way, it hasn't kicked in all levels of our society. Well, that's not the only technological advancement. The AI hasn't really kicked in. Automation, everything hasn't kicked in. Many expert systems that completely replace anything that a human being can do haven't completely kicked in. So what he was saying is that the prices of commodities is going to gradually go down and down and down, even come very close to zero, because it takes almost no effort to dig them up and process them. And then he went on to say, on top of all of that, the technological advances allow for creation of new materials that are better materials or better fuels, like what's happening right now with solar and wind. The prices of these commodities has nowhere to go but down. And, these two economists had this bet going for a while, and then the one that was saying commodities will rise in price, he finally figured it out and gave up and lost the bet. But that's all that has been happening with commodities. So also another thing that's very wrong with the commodity trading or commodity markets is that when you go, for example, say you're going to buy a contract for coffee delivery, okay, and, you are not the only one trading or dealing in coffee contracts. There's millions of people, and these markets are very open. Anybody in China and many foreign countries could be trading coffee contracts. But and this has actually happened. But the actual after the options expire, actual delivery of the coffee that companies that actually want this coffee has to be in the physical form because they want to use it or consume it. This the amount is nothing compared to the amount of money that's floating around, and people are like speculating over it because all these people, they're just gamblers. They're gambling on the price of something or a synthetic price of coffee. None of them are like a buyer for Starbucks or okay. So basically, the market is very, very fake, and the price they have for this coffee is not really true in the real world. The prices of coffee as a commodity has been collapsing, and the buyers are extremely demanding. Say, for example, Starbucks that buys coffee or Peet's Coffee, they demand because they have to satisfy many different customers. They demand the coffee that have very high quality and also have very different taste, and they're very fickle. And on top of all of these disasters that have already happened to the commodities, the giant corporations that actually use this product, the companies that actually buy the silver bars, or the company that actually has to have the oil to process, or the final consumers, okay, everybody has acquired so many choices, and they can often go directly to the seller, to the manufacturer. For example, I buy stuff that I'm just telling you one example would be like electronic connectors and like USB ports and stuff like used for the computer. Okay, but these stuff, almost all of them are manufactured in Far East, in Asia. I used to, for example, be very desperate to go to Radio Shack and pay $20 for like USB power cord or whatever. $20 would be nothing. But I go on eBay now and I buy them like directly from China or companies that are pretty much very close to the manufacturer for like $2, $3. So this is exactly where all the commodities have gone, right around this. And what I'm trying to say is that the collapse in prices of commodities have already happened. Okay, but it does not reflect in the markets, because these markets are fake, and the people who are there, they're also gamblers. They're not really the buyer, the technician that has to really do this and take care of it. So what I'm saying is that many companies and many buyers and many individuals, even in the personal level, they have found ways to buy commodities without going through these fake markets. And that's why there is this underlying fear that, hey, everything is going to collapse. It's because they kept printing money and jacking up these artificially fake markets, and then they don't know when the reality sets in that what's going to happen. Well, I just talked a lot about commodities, but there is like the Federal Reserve pumps up the stocks too. For example, I want to make a comparison between what the U.S. companies are doing with their stock valuation. An actual company that's a very good company and actually produces a lot, is also profitable and does operate in the real world, uh, and that's like Gazprom, which is the Russian oil giant or gas giant, or even like Iranian oil production and sale, which is an actual company. I heard that the Gazprom's PE ratio, that's price to earning ratio, is like about, or was about like 5, and that's a really good company. It's a real world company. No sudden appreciations. They have been in the business many years, and they're producing a solid commodity, this and that. And their stock might have been also influenced by the folly of central banks in the West, but in their own country and between foreign investors, this is a stock that I could just buy, and I would have very good confidence. That's a good buy. That's a good investment for long term, and also I would expect significant return with a P of 5. Well, you can compare that with the P ratios of Amazon, and they hardly make any money. The stock price is out in the stratosphere. So the American investors and traders, they have this fear, and it's very real fear. It's because they know that the real world is not here. It's not in the market. This is a fake market. And what I'm saying is that it's okay, and probably if you have money, you should walk away from these fake markets, and try very traditional, very mundane ways of buying commodities. Just directly contact the seller, or a manufacturer, or a miner, even haggle over the price, and see you can get a nice discount because you're buying directly, and he doesn't have to go through all these shenanigans to sell his silver. Anyhow, you get the picture. And I was talking to a neighbor, and he's getting into trading in stocks and commodities, and I told him don't go there, but he wasn't listening. And finally I helped him kind of figure out traders that put their trades online, like Gregory Mannarino. I don't know of another one that's very generous to allow people who are like gamblers to not to lose it all, but at least have some kind of experience or reasoning, or see how to deal with the rigged market. Not to be the ultimate sucker, but I myself, I don't know. I am in the financial analysis business, but deep down, I have no trust in these markets. But I know that there is going to be a lot of money to be made, but when the whole thing crashes, or because the Federal Reserve continuously pumps up these markets, and I don't know. Thank you for being in my YouTube channel. My stuff is very much research. You'll be hard pressed to find this material elsewhere. Please subscribe and also leave comment. Thank you very much.